Hello everybody, welcome to this market report. My name is Christian Charlo. Today we're Thursday, April 23rd, 2015. Today folks, I want to talk to you about a movement that we had in the markets today. All markets have rallied, but if we take a look at the situation here in the markets, first of all, the TSX index has rallied, but so far it's unable to confirm a bullish cycle because it cannot break that resistance at 15,477 points. On the SPY, we're breaking slightly the March 2015 top, but there's still the February 2015 top that has not been broken out. If we take a look at the situation on marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below for marketgurus.tv. So far on the marketgurus.tv, on the New York Stock Exchange and Nasdaq Stock Exchange, only 3 sectors out of 10 are in a bullish cycle. So the fact that we only have 3 sectors out of 10 that are in a bullish cycle, the fact that the SPY is unable to break its February top, so far all reasons why we believe that today, even if there are some nice bullish signals on the energy sector, you should definitely continue to be cautious and not be too greedy. Now, USO is surging today because Saudi Arabia has launched another wave of attacks on Yemen, on the rebels there. The energy sector is unable to start a bullish cycle. So on marketgurus.tv, we still continue to hold on to our bullish exposure that we have on the energy sector among those 2 ETF, ERX and HEU. Those 2 bullish ETF, we're still holding on to them on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. Now, are there some new opportunities on the energy sectors today? Yes, there are. One of them is Berkeley Energy. Berkeley Energy, the thing is that it's a stock that we could consider it's still within a neutral cycle. So I believe it's a stock you can start to build up your long positions on it, buy some shares, put your exit point around 770, because 770, we will have the reversal of this upward trend, and around 880, 885, where the stock would reach its 200-day moving average, that will be the point where you're going to have to take some profit on that positions. So okay for an exit for entry point today, 770 as an exit point, and 885 as a point for taking some profit. We also have another sector that is not yet in the bullish cycle, but that could start a bullish cycle. It's the consumer discretionary sector. And one particular stock that we like on that sector is Nike. However, Nike, though, it's a slow mover. The risk I see with Nike is that we have what's called some kind of bearish divergence here, because look, here we went higher than that top here on Nike, while the stochastics was low. So this is something that we have on Nike. However, Nike, I think you need to be there for the medium to long term. It's going to be a slow mover. It's a bet that the consumer discretionary sector could start and confirm a bullish cycle that could propel it higher than March 2015, and exit point around $98 on a stock like Nike below that support. So Nike is one of the best in the consumer discretionary sector, but as I said, you could actually go with a half positions or 3/4 of a position instead of a full position, because the consumer discretionary sector is not yet into a bullish cycle. Another particular sector that's strong is the steel sector. We have explosive breakouts. Reliance Steel is one of them, but already surging by 9%, which makes the loss potential too great. So it was good for day trading today, but right now I think it's getting too late for swing traders because the loss potential is getting too great below that support at 56.30. Rio Tinto is one of the best. I think Rio Tinto, it's definitely at a nice bottom there. So if you're buying Rio Tinto, exit point is clear, 40.81 for Rio Tinto. And on marketgurus.tv, we already had an exposure on the steel sector. It was United States Steel that we recommended on April 14. We're able to take some profit on that stock. Today, the stock is confirming a new bullish signal. But as I mentioned earlier, with the market situation where only 3 sectors are in a bullish cycle in the US, where several companies will release their earnings next week, and the strength of the US dollar will have an impact on their earnings. So we're not 100% convinced that today's rally can propel the markets really higher to be able to make a 5-10% on the positions that you're buying today. So this is why it's important, folks, that those positions that you're buying today, you're not being too greedy. You go with a half or a third of our positions. And United States Steel, even if we still have that positions in our analyst shares portfolio on marketgurus.tv that you can have access for free for 10 days, we're just holding on to that positions. So among the list here, only one stock represents a great opportunity for a buy. It's Berkeley Energy, but going gradually with a stock like that, because as I said, the energy sector is not yet confirming any new cycle. So that said, folks, see you next week on marketgurus.tv. Don't forget you can always follow us on Facebook, on Twitter, and never forget, the more money you make, the happier we are. See you next week.